Alright, hello everyone. Welcome back to a brand new price action study. So we're going to be starting off with the news drivers for today. We have these high impact news drivers at 8:30. I'm going to be watching ICT's video. I guess he's going to be doing a video on non-farm employment change or non-farm payroll. And honestly, I don't know a lot about that news driver other than, it has high impact, and I don't remember what he said about like not trading before it, or yeah, I just don't remember what he said. So I'm gonna watch it. I'm gonna deepen my understanding this weekend, and additionally, I want to get through. We'll do. I'm gonna get through another 4 videos in the mentorship this weekend alone, Saturday and Sunday. Um, and yeah, so let's go ahead and get to price action study. Start on the higher time frame, monthly. And also, the reason that price gapped like that, and I should have even just looked down here, okay, that's because of the contract switch. So that happened on Friday, and that's the reason we saw that gap yesterday. I was like really perplexed by it. You can't see it here, but obviously you'll see it in just a moment, and if you watch my last video, you'll see it. I was really perplexed by that. So just the understanding, just a simple little lesson, understanding when the contract, switches, there will be a gap in price between the open and close of the next candle. Um, and let's see, or the close and then open of next candle. Obviously bullish, obviously bullish, bullish. No reason to expect anything less. Still buy side above here. Aggressive run for these buy stops, but understanding that this is an order block. See how it wants to respond to the order block. If it wants to break lower from there, or at least retrace into this previous range, then we will focus on that. Ultimately, no indication for us to see lower prices. I'm not gonna, say much more than that because it hasn't changed. All right, same thing I've been expecting all week. All right, so that out of the way, we have our higher time frame bias. Let's go now to the higher time frame chart, and we'll start looking at the daily. All right, boom. So here's that gap I was talking about, right? So from Thursday, Friday, here's open. Friday's candle. Ultimately, we closed higher, and when the week closed above these relative equal highs. After this consolidation, we have these highs, relative equal highs. All right, price did trade above those. This I've had this marked here, and like, I don't even know how long it's been there. Just go watch my videos. I knew price was going to draw there. In fact, I can delete this. I knew price was going to draw there before it happened. I predicted both of those levels. I've been saying that price will continue higher. I've been also saying that, we're in a consolidation, so we're range bound right now. Looks like price wanted to break out of that, and we actually took these buy stops. And again, the reason for the large gap there is simply because the contract switching on Friday the 8th. And that's because I study on the continuous contracts. So yeah, same thing here. Oh, I don't know why I'm moving that. Same thing here for NQ. Okay, ultimately we're just looking at the daily candles, where it's been going, all right, where it's came from, all right, and ultimately price went for these highs, consolidated, distribution right here in the form of a consolidation, and accumulation on both sides of the market. These relative equal highs, boom, buy side taken, aggressive run to the upside, okay, and then of course, like I said, same thing for the gap. Let's go ahead and refine it on a 4-hour. Here's our daily range. Again, closed above these relative equal highs. How about for ES? Same exact story. So really much to say apart from that on the 4? No. It's just been in a consolidation. Close the week above a prior high, above these relative equal highs. Buy stops above here. Okay. 4-hour weekly range. Now this is important. And I will post another video on the weekend where I'm gonna actually go through like the weekly range, because I've been like posting at least a video on the weekend, so I'm gonna do that. And also then I can vocalize what I learned about NFP. But anyways, consolidation, we've seen that for multiple weeks. Close the week higher, above a level of buy side, above an untested external range liquidity back here. Okay, all those stops have been taken. Again, that gap, same thing. And we close the week higher with this move here. As far as weekly range, open. So accumulation and distribution to the upside. Ultimately confirming our bias that we're continuing to see higher prices. But again, I am keeping mind of those higher time frame institutional levels. Let's go down to lower time frame. All right, and we'll look at today's high and low. Low to high, open. All right, this 535. These large wicks, probably the news driver. Let's see, 830, 830. We see aggressive movement to the downside. Boom. Trades here. Buy stops here. Buy stops here. Buy stops here. Runs those buy stops very aggressively. Retracement into that range. Then again, goes for those highs later in the afternoon. How about for ES? Same thing. Literally, these look the exact same, right? Only difference here, there is a high that formed at precisely 4659 and 3/4, and then there is a lower high to the right of it. Whereas this, well, actually, upon looking further, it actually did the same thing. It's just this you can see a little more clear, but it's doing the same thing. So making a lower high. This high is lower than this high. We're not looking at the wicks. All right. So closed higher, closed above those highs. I don't really know what else to say. I mean, I'm looking at levels of liquidity. As far as like a shift in market structure, right? We've been in a consolidation range. There's really not much more to say than that. I mean, the more we get to these lower time frames, we're just looking at what we were looking at on the higher time frames, just with a lot more noise, to be honest. And that's what ICT said. I mean, I'm not really trading right now. Most of your analysis should be on a higher time frame. It would definitely be beneficial if I was actually trading to look at the 15-minute, and I think it's even beneficial now, just to get in the habit of doing it. But I really don't have much to say. I mean, untested low here, untested highs here. I could mark these as different levels of liquidity, but they're very obvious. Let me do that, and I'm gonna obviously chart out the low to the high. Go. Okay, and Sunday. There we go. And that marks the end of the week. All right. And really on the 15-minute, we mark these levels of buy side. And this chart, by the way, when I actually do start trading, I'll have a separate chart where I transpose these levels to the actual, like I'll just use this for study, and I'll actually transpose those levels to the continuous contracts, like the micro and just normal E-mini monthly contracts. I'll actually refine them. But ultimately, I think the continuous contract is better to study on just because of the amount of data that you have to work with. Whereas if I was to try to get that month perspective, like I'll just show it because like let's see, we're on the same thing, right? But then if I go on the monthly, let's look at the data available. Here we go. That's it. You know what I mean? So that's why we're studying on the continuous. Better idea. I mean, and obviously, granted, these are all higher time frames, but I like to have that more wider, broader perspective. So we're going to leave it at that. These levels have been noted. Of course, I'm going to continue to chart this on my own, note those highs and everything. And I'll do a review and I'll do a price action study this weekend, so count on that. Like anyone's really watching these anyways. It's funny. All right, let's see. Oh yeah, and then there we go. All right, leaving it at that.